It's tea time, but I think this is going to be a really interesting conversation. It's 2025, and capital ain't cheap anymore. Now it's all about making every rupee count, and I'm sure you've heard this sometime in the day-to-day. How are companies like, say, a Cashfree or a CredX turning constraints into advantages while balancing discipline and ambition? This is what we're going to find out in this panel. Riju, I'd like to start with you first. You're a payments gateway. There was a time in 2023, December, when you might have got a call where the RBI had frozen onboarding new customers. Take us through that day when you heard that news. What was going through your mind, because your growth engine was choked off?
Always pressed ET to come up with the tricky questions. Yeah, so I think this happened in September, and I think it came as a part of our in-principle approval for the license, and the licensing process had been going on for 2 years, and we were also very expectant and all of that. So it was part of that in-principle letter. So the first part of it was you have got the in-principle approval to operate as a payment aggregator. So first impression was we were very happy, overjoyed, and then we saw the lines next to it. And yeah, it was a bit of it took some time to sink in, and then it was a shock, and then we abided, that was it, right? And we compared notes like dekh sahi likha hai ki nahi likha hai, and is this what is actually written? And and unfortunately that time we also had got kind of signed up a deal with Shark Tank, right? And which was supposed to be a very big marketing campaign, right? So that money was also locked in. So unfortunately, when our onboarding was frozen, our biggest marketing campaign was actually also going on, which happened in December. And people were asking, like, why are you kind of doing this when your onboarding is frozen? But that contract had already been signed. So it was a double whammy, but I think we recovered well. I think it was like a fundamentally turning moment for the company, in a sense that we really doubled down on I would say compliance. That is number one. And we kind of stopped onboarding, and we stopped everything, and then we just read the regulations for 1 month, 2 months, really went deep. That how do you kind of ensure that your operations run smoothly? Compliance should not mean that merchants have to face trouble. The merchant experience, I think, got better as a result of it, and I'll talk about it how it got better. But we just evaluated everything from ground up for 2 months, 3 months. Kind of made sure everything was done on a war footing. All the changes that were required were done in. And as an output, it became like an AWS moment for the company, right? We rebuilt our KYC onboarding stack from scratch.
And we'll talk about that.
Okay.
We'll definitely talk about that.
Sure.
Did you ever go through a moment like that with CredX?
Yeah, I'm sure every startup goes through a near-death experience in their journey throughout. And in fact, we were among the first cohort of fintech companies in India when we started in 2014-15. And at that point in time, the regulations were not that clear in terms of what should be done, what should be done. There were a lot of gray areas, a lot of things that were happening in the market, and obviously the market was not that matured as what it is at this point in time. So you have to get started. You start picking up, and you want to build a model. Your audience, your customers, and try to build on top of it. So that's where we started doing. And over the next couple of years, we started realizing that being in fintech, it's very important to be regulated. I think the journey has been great. It's been more than 10 years now. We started with a model which was, I won't say unregulated, but it did not have any regulation at that point in time, to a company today where we are fully regulated. Right. So it's been a journey, and we've seen our ups and downs in the interim.
So I want you to talk about what is the one crisis lesson about capital that every founder needs to internalize, before they hit their own wall?
People generally say that raising capital is difficult. I say deployment of the capital is more difficult, right? How wise you do that, right? Capital are always available in maybe scarcity or abundance. That's a separate issue, but I think deployment wisely in the priority way is more important for in any circumstance, I'll say it's always wise to be, on those aspects. I would say that.
All right. But how do you make sure that the lesson sticks, even when the times are good? Because we tend to forget that.
Yeah. So time is the best teacher. I would say that whenever there's you get a setback or the tough time in the business, you start allocating your resources as per the priority. That's the learning you get it. When in the abundance, then sometimes you become careless and we try to take many objectives together. One thing what I learned over the period in the good time, and maybe like you may say it's a old school thought, you should start creating reserves, right? It is very, very important, and that helps. We have seen in our journey in SCL also that when it's a good time, always keep some reserve, and that reserve becomes so valuable and useful when you need it, really in a tough time or in the growth time, both. Because money is not free. Whenever you raise it, there's a cost to it. When you raise in a difficult time, there's a more cost to it. So it's a learning through the journey.
Right.
That so this is the way this is my belief, and I learned over the period like this.
An age-old wisdom, very important for companies to adopt and adapt.
Absolutely. And one thing, I was listening in the earlier conversation, the growth and the profitability, and I always say that it should be a balanced approach, right? One cannot take off from the profitability. I'll say sustainability is a more relevant thing. Like you should be very clear when how you want to take a growth and where you want to be profitable, though it's not in your hand, but at least our efforts, our assumptions, our direction has to be towards that. That's very, very important. Otherwise, if we don't take a holistic approach, then we are going to miss somewhere. Again, dynamics changes and business goes by their circumstances, but these are the lessons one should always keep in mind.
One should learn. Right. The test of fire makes fine steel. Anurag Jain, at Credix, you are now promising working capital under 100 seconds. Now, it isn't just about speed anymore, is it? What breakthrough made this possible for you, and what did it help you understand about innovation under pressure?
So I think when you are in a fintech space, we talked about regulation as one of the important pillars of a fintech organization. I think the second most important piece is technology, right? And the reason why a lot of fintechs today exist in the market is because they are basically, building on the inefficiencies of the large financial institutions that have been operating for a long time, over the last couple of decades. So I think every fintech starts with a business model where they're utilizing tech to build on those inefficiencies, right? And tech has always been a part of the DNA of the organization. If you're not able to solve the problem for the businesses, in a shorter period of time with lesser documentation, with a lower cost of capital, and also most importantly, the accessibility, you are anyways out of market. So I think right from the beginning, we were very, very clear that we have to do this in the shortest period of time and giving the maximum reach as much as possible for the businesses.
Do you feel that constraints force clarity in a way that abundance never does?
I agree, and COVID is a classic example, right? I think the way we've been able to scale post COVID, one of the biggest reasons was people were not able to move, right? There was no mobility. I mean, you can't go from one place to the other, and people were forced to come online, right? That's a different story. That it also sort of break the bone of the black economy in the country, and you were forced to come and align to the mainstream economy. You were forced to come online to seek loan, seek funding, all kind of stuff. So that helped us a lot, and I think at that point in time, given the constraint around the movement, given the constraint around the funding, I think a lot of people started coming online. They started organizing their documents. They started looking at what is important and how will they be able to seek funding in future. That's where that discipline came in the ecosystem.
All right, Riju, for you, embedded payments became a new revenue source, right, during the freeze. So, what was the framework that you used to identify hidden value within your existing infrastructure?
Yeah, I mean, more nuance on embedded payments. I think it was AI-based, not even AI-based, onboarding and fraud solutions, because the specific instructions from the RBI or the regulator was like improve your onboarding and monitoring processes, right? So that is what we doubled down on. And first we built it for us, and then we realized, right, that what we had built is something, and it's a, not just problem localized to us. It's something everyone has, every fintech has, other payment companies, lenders, banks, everyone has that. And then it became like an AWS thing, right, where and fraud and onboarding was a solution. And
Right.
today, it's 15% of our revenues, right? So that was the outcome I was.
How do you balance, this quick monetization of a product with long-term scalability?
I think scalability, it's like the quality of engineering and the quality of product and design. I think that's a lot of, I would say, attention to detail and craftsmanship that goes into it, right? And at a micro level, yeah, you pick big markets. I think take big bets on big markets, right? And for us, onboarding and fraud, right? I think payments was first thing that went right, and then onboarding and fraud is a big thing, right? As we see today, right? It's a global problem.
So you've navigated multiple cycles, right? What's the pattern that you see in companies that innovate themselves out of a crisis? Innovate themselves out of a crisis, where innovation takes them beyond the crisis. There's something like a cash free.
Yeah. So, every business, like, innovation needed for a purpose of the, bring the efficiency and the productivity is a ongoing thing. I don't think it's a one-time job or a one-time thing to be done, right? So cycle happens because when you grow, then you tend to bring a lot of inefficiency in the system. Also, is built up. It's very natural, and then the cycle comes, and then you see that things are not going right. And then you see each and every corner and try to clean up and then use the productivity tools and efficiency and all those things. So this cycle happens, and it happens all industry, right? There's sometimes is the internal pressure, sometimes external pressure, and you take it and do. It's the ongoing thing. I never see it's a one-off kind of a thing. One should build up in the cycle of the organization.
All right, linked to that, have you ever killed a bet if the data didn't back it?
Oh, yeah, absolutely. A lot of times, actually, especially post-COVID, everything was shut, right? And all the offline infrastructure was, immobile. And we started working on a lot of products parallelly. And there was a time when we were actually, working on, more than 7 products at one point in time. And obviously, over a period of time, we realized some of them will work, others will not. And we had to sort of, shut down a few of them and, have a more razor-focused approach towards the one we were, currently going ahead with. So yeah, we've done multiple times.
I think every founder faces this sort of a paradox, right? That is to be disciplined enough to survive, but be ambitious enough to win. In supply chain, for instance, one tough client can really have a disproportionate impact on your business. But if you say no to growth also, that can also choke you. When stakes are so high, what is your decision-making framework?
So I think we've learned a lot from our customers, right? Because they teach you what is important, what should be the priority as far as the business is concerned. But talking about the decision making at the organization, we have a layered decision making framework, which involve not just the board but also the founders and the second level of management which is there. And we try and encourage people to present their ideas, right? And it's not just about if the founder said something, everybody has to align with it, right?
Yeah.
I think that's the best recipe for failure. I think what you have to be open to is that you should be able to listen. See, at the end of the day, every decision is a bet, right? Today, everything that you move ahead with, right, might not work, right? Or, some might work, others might not. But at the end of the day, it has to be a constructive way of making decision, where you're involving everybody. And then you're going in the market with that decision, taking the full ownership of that decision. Whatever happens after that is obviously, it's not in anybody's hand.
Linked to that, Riju, in that time, do you trust pure numbers, or is there something to say about instinct?
Yeah, I think a lot of decisions or a lot of bets, I think, are gut-based. You don't always have enough information, that you need. So I think you develop that intuition from trial and error by making the wrong decisions, right? But I think a lot of it is gut-based because you always have less data than you want.
All right. What is the hardest strategic no that you might have said to protect your capital discipline?
In the old school, I always say that don't throw the good money behind the bad money, right? So you do multiple businesses, you do multiple initiatives, and as he's saying that there is no guarantee that you will succeed everywhere, right? One thing is what I learned, that one should have a courage to say it was a mistake. We will not take it forward. Either find a way to make it work or just leave it and shut it. Because there is no way it's a wise thing to throw, as I said, that good money behind bad money. But that decision, like how long you should wait, it's always a tough decision. But I think with the experience, people learn it and take decisions. So this is my take on that.
Any points to add?
I think everybody goes through that phase in their journey. I think for us, it was, sunsetting our original business model, right, over a period of time, because obviously now we are a regulated company and we are one of the 3 companies in India which has both the trades license as well as the ITFS license based out of Gift City. And so obviously we cater to both domestic and global trade finance, and now we operate in a very different world as where we started. So yeah, it was an important and an emotional decision to say no to something that started everything. I mean, that's why we are here as of today. But I think as a business, we understood what is important, and at each point in time in your journey, you have to prioritize what is important and what will set you for the next couple of decades, rather than just focusing on what you started with.
Nobody saw the RBI freeze coming. Nobody saw COVID coming, or what the outcome of that would be. Pawan, after decades of navigating uncertainty, how do you build financial resilience that actually gets stronger with shocks? Is there a way to do so? Is there a...
in a longer term, these cycles comes, right? And the learning from each cycle is basically, business is never static, right? It should change with the circumstances. Just take an example of the COVID, right? The way of doing business was in an X way, right? After COVID is become Y way. One should be flexible in terms of adoption is a very important thing. You can't really have a rigid view of not adopting the new things or the way of working the new things. And it's a again, I'm always saying that is a new learning all the time. Learn new technology, way of working the things in a newer way. Right, it's a constant learning, but one should be very clear on the assumption and changing the assumption and then sticking to it, and then see that what is the impact on the outcome of it. So if these all dots are to be connected nicely, and then work accordingly. Yeah.
So I think one way to capture your experience over a period of time, would be to look at 3 things essentially. One is people. You need to have people in your organization who've been through that experience and you've seen what is the kind of impact that kind of a crisis has, put on the company. Second is processes, right? If you have the right set of processes in place, right documentation, to be able to capture what has happened, and based on that, you are constantly improving those processes. That kind of, captures the essence of that crisis. Third is the data, right? If you're storing that, experience through the data that is captured during that crisis, I think if you have these three things, you can build a system which is more amenable to future crisis. Yeah.
Right. Okay.
I think one thing is just to reaction to a situation is very important, right? How much time you take to react to it, right? I think timing sometime I've seen is very important. If you don't react to a situation on time, that's perfect timing is can be a debatable thing, but it's very important how you react to it, how to use strategize around it, and then capture that knowledge and implement and then go on.
All right. We'll take the same example, Riju, that we spoke about, the things that you went through in 2023 as a company. You've recently had a funding round, right? So that's not just growth capital, but it's also resilience capital in a way. How are you now building redundancies into the business without sacrificing efficiency?
Yeah, I think redundancy is a key part. I think what we say internally is don't focus on the 99% of the payments that go through, but actually build for the 1% that don't. And the customer experience and the merchant experience there is, what defines you as a company. So everywhere, I think, for instance, in your engineering systems, your observability, even when you are, implementing your AI, taking the feedbacks and, improving the model. So just measuring that, keeping those feedback loops, very ingrained into the product and keeping your observability very high. I think those are things we really, I guess, take pride in, I would say, or put a lot of thought into.
How do you ensure that, that redundancy does not morph into complacency?
So that's a good point, right? There is always a human also who is looking at it, right? We don't say there is no human in the loop. So for instance, when our onboarding, we say everything is automated, but there is still a human that looks at merchants that say cross a certain amount of, processing volume. So yeah, that's how we kind of manage that as well.
Anurag, you want to add something to it?
No, I was talking about redundancies. I mean, most of the, the resilient and big businesses who have seen the test of time for the last couple of decades are actually boring businesses, right? So you have to build your processes to be able to do a few things in almost a perfect way without even looking at. So in some cases, you have to just manage by exception, right? Without unnecessarily fixing something which is already working.
Is there any operational change you've made that you think is going to help you weather the next downturn?
So I think COVID was a big eye-opener for us, and that is, sort of kind of pushed us towards, changing a lot of things, not just on the operational front, but also on the financial front. I'll talk about the operational bit. So from an operations perspective, you would want to de-risk yourselves from a certain set of vendors, or, if you're doing sourcing, we don't source anything, but for businesses who are doing sourcing, you need to be, not increasingly dependent on a few, right? Building your moat, for example, right? That's another thing where you are trying to create a business which is bulletproof. Talking about the financial side, I think, one aspect I wanted to touch upon is, the working capital management. And that is very, very important from a capital efficiency perspective, right? Today, with the same amount of money, you can have two businesses operating at a very different level. Because one of them is managing their working capital properly, or they are maybe working capital negative. I mean, they get the money on day one when they ship the goods, as against somebody who's, getting the money, let's say after 90 days, 120 days, 150 days.
Right.
So being on the right side of the working capital management actually sets you, to get that financial sustainability in your business. And also creating the right set of, I think he touched upon, having the right set of, financial buffers in place to make your company more resilient, to overcome some of these crises that come.
Good point. So, basically the old growth at all costs playbook is now dead, right? So, what's the new rule for capital efficiency that every founder in this room really needs to understand? So, all of you, this is my last and final question to you. So, this is a rapid fire in 2 lines.
I think more focus on one line. If I say growth at all cost, I think I'm not in for that. Growth is important, but sustainable growth is important, right? Hence, the metrics for each business, critical metrics for each business should be like in front of eyes all the time, so that eyes are not off. Otherwise, it becomes tough, right? Why, we see that the startup, especially for the startup, etc., like why someone is succeeding, someone is not, is basically sometimes these things matters a lot. So definitely important is that more careful. Again, I'll always say cash is the king. I sometimes, being a finance person, also don't understand P&L lines, contribution 1, 2, 3, 4, 5, I don't know. End of the day, what I understand whether we are making money or not, right? Hence, growth with a very clear as a visibility when I'm going to be sustainable and make money. I think that's important, and assumptions, etc., should be in from key assumption, key metrics should be reviewed on a regular basis.
Cash is king. Are you going to engrave that, somewhere in your office, Anurag?
Yeah, I think capital is always available. I mean, if you're focusing on 3 things essentially, one is obviously build a moat, whether it is your brand, whether it is your regulatory moat, whether it is any kind of distribution moat, for example. Have a path to profitability, right? If you are able to show your investors that this is how you want to go ahead and this is how you are building it, then it'll help you to raise capital. Third is corporate governance. I think that is by far the biggest dampener in terms of the companies, and a lot of times people underrate that. I mean, they underestimate the power of running your corporate governance in a proper way. So if you're doing all of these things properly, I'm sure capital is always available, sometimes at a slightly higher cost, sometimes at a lower cost.
Yes, the last word you have.
Yeah, so I think for us it is, I think, like innovation, I would say, right? I think you can do a lot of first order things and do more with less and, run, but I think we are unicorns, and I think the ambitions are for us to be decacorns. So yeah, for that, I think you have to innovate and stay relevant in this fast changing world. I mean, yesterday I was sitting with this young founder who was around 25, 26, and we spoke for a couple of hours. And after that, he said, you sound like a dinosaur, right? So basically, you have to basically go back to the drawing board and think basically what's happening and how do we keep pace with that. So I think innovation is the way.
All right.
Just maybe it's a one-liner. I will say that I think focus should be to create value than evaluation, right? Valuation will follow. I think they should not be much worried about it, right? Just focus on how to create value, and value will come. What he also said that doing the business the right way, the right governance, right deployment, right intent, right stakeholders, right? Create value. Valuation will come.
Right.
It will follow.
All right. I think that's a great way for us to end today. The companies that will define the next decade are not the companies really with the most money. They're the ones who learn to do the most with the little that they have. And they've mastered the art of intelligent capital deployment. So thank you very much to all the panelists for sharing your thoughts with us and for your time. Thank you.